Welcome everyone to Vested Interest. This is Shane back for today's stock pick of the day video. It is December 10th, Tuesday. We're going to take a look at one out of the industrial sector, United Rentals. And if you could do me a big favor before we get too far in the video, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever we put out any new content. I do this stock pick of the day video series Monday through Thursday whenever the market's open, where we take a look at a stock like United Rentals that's pulled back on the day and see if it's presenting any value. And for those of you who are able, there is the thanks button down below. If you want to buy me a cup of coffee, go ahead and click on that. There's several tiers down there you can donate to the channel. And a special thank you to all the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. Now, this is the Vested Interest Stock Screener. This is how we will be going through the video today. At the end, we will see how it shakes out. It must meet 5 of 8 to make it onto my watch list. Unless it's a financial company, then it must meet 6 of 9. We add in price to book. You can use price to book for any company, but financial specifically, the 1 or is fair value. Anything under 1 is undervalued. Anything over 1 overvalued. That's really for banks and other financial companies like insurance companies. But like I said, price to book can be used for any company. Just if you are using it for something outside the financial sector, don't use the 1. Make sure you're comparing it to other companies in the same sector in doing similar business. Now back to United Rentals. Check them out at their homepage, www.unitedrentals.com. That's www.unitedrentals.com. That is their homepage where I pulled this information from. United Rentals, Inc. is the largest equipment rental company in the world. The company has an integrated network of 1,520 rental locations in North America, 38 in Europe, 23 in Australia, and 19 in New Zealand. In North America, the company operates in 49 states and every Canadian province. The company's approximately 26,650 employees serve construction and industrial customers, utilities, municipalities, homeowners, and others. The company offers approximately 4,800 classes of equipment for rent with a total original cost of $20.59 billion. United Rentals is a member of the Standard & Poor's 500 Index, the Barron's 400 Index, and the Russell 3000 Index, and is headquartered in Stamford, Connecticut. Additional information about United Rentals is available at unitedrentals.com, which we just covered previously. And I've used this before in the construction industry. Probably a lot of you out there have used it. I've rented equipment from them. Actually, we have a contract with them with the company I work for now to do just that, rent equipment. And they do almost anything you can think of, right? Aerial work platforms, air compressors and tools, compact paving equipment, a lot of equipment, concrete masonry, earth moving equipment, forklifts, ground protection mats, HVAC equipment. So if you needed a temporary generator or temporary heating and cooling, you could call them. Ladders, lawn equipment, ladders, not only ladders, but scaffolding, lighting equipment, material handling, mobile offices, other equipment. You can read through the rest of it, but obviously they service construction companies, industrial companies, warehouses, stuff like that. If you need a piece of equipment, they are really, or tools, they are really the place you are going to call, or one of the places that you're going to call if you're looking for something in that industry. Now, the reason we are taking a look at them, down 4.7% on the day. We are talking about United Rentals, ticker URI, out of the industrial sector. Closed out the day at $796.23 per share. Looks like they're actually down a little bit in the after hours as well, at least whenever I pulled this information. 52-week range as low as $503.23, as high as $896.98. They are not closer to the 52-week low. They need to drop significantly more, but they're not quite butting up against to their 52-week high either. They are closer to their 52-week high, I would say, but not right up against it. Market cap of $52.251 billion, a beta of 1.68, so they are more volatile than the overall market. I'd use that volatility to your advantage. If you're buying this company, you want to be buying them whenever they're closer to their 52-week lows or setting a new 52-week low rather than as close as they are to their 52-week high, at least in my opinion. PE ratio, price to earnings at $20.84 per share. Seems a little elevated for a company like this, but if they're growing fast enough, then they may be justified in that. EPS, extremely high earnings per share at $38.20. Rare case that we see the PE, or I'm sorry, rare case we see the earnings per share growth higher than the PE, and that's even a high PE. So that's not the typical case with most companies. Earnings date sometime between January 22nd and January 27th if you're interested in seeing what that looks like. Tune back in for that little window there. Forward dividend is $6.52 per share. They are quarterly payers, so divide by 4, though we will see that at the end of the video here, towards the end of the video. Low starting dividend yield on this one, 0.78%, so under 1% starting dividend yield. Ex-dividend, obviously, if you were to get them closer to their 52-week low, that would be significantly higher, over 1% for sure, if you could get it at that 503 or below. Ex-dividend date, November 13th. Looks like they paid out on November 27th, so we're past that. You would be in line for the next dividend payout, though you would have to wait a few months to get it, a couple months to get it. 1-year target estimate, at least according to Yahoo Finance, $849.56. So they don't see it quite getting back to its 52-week high here. Jumping over to the right, typically we would look at dividend yield theory, and to do that, we would look at their 5-year average and compare it to their current dividend, but they haven't been paying a dividend for 5 years, so we can't do that. So nothing to report on dividend yield theory. I will say their payout ratio is extremely low, 16.66%. I like anything under 75%, unless we're looking at REITs, business development companies, something like that, where they typically pay 90% or above their free cash flow payout. Dropping down below, I like growing free cash flow over time, because typically if a company has growing free cash flow, their company is safe, they're growing dividends as well, they're buying back shares. Those sort of things are what companies do whenever their free cash flow is growing. They're also increasing that dividend over time, which is what I'm looking for. Going back to December 2021 here, you can see $491 million in free cash flow. 2022 was $743, big jump up. Looks like a slight decrease in 2023 down to $634 million. But in the trailing 12 months, looks like they're closer to their 2022 numbers than their 2023 numbers, though we'll have to wait till the rest of December shakes out and see what the rest of the numbers, because keep in mind that trailing 12 months does include a little bit of 2023 there still. They are repurchasing shares as well. You can see here going back to 2021, 34 million in repurchased shares, big jump up to 1 billion in repurchased shares, a little over 1 billion in repurchased shares. Bit of actually a little bit more of an increase in 2023, 1 billion there. I don't know that increase, it's not significant, 2,000 more shares. So I don't believe that accounts for the decrease in free cash flow, but their repurchase of shares in the trailing 12 months is even higher than what they did in 2023. It will be their largest repurchase of shares, at least in the last several years. I do like that. Seeing a company pull shares out of the market makes you more of a shareholder, even if you are not adding to your position. Jumping over to stockanalysis.com, the previous page was Yahoo Finance. I am not affiliated with either site, just 2 sources I go to for information, and I do recommend more than one source for information so you can make sure that what you're looking at is accurate and up to date. They do have 15 analysts that have taken a look at this. They call it a consensus buy. They do have a low estimate of $485, which would be below their 52-week low, and it would represent a 38.85% decrease from where it currently sits. Average estimate of $755.93 would represent a 4.69% decrease from where it sits, and only if it hit their high of $985 would you see upside on this one of 24.2%, at least according to the analysts that have taken a look at this. Now, jumping into statistics, I like to look at return on equity and return on invested capital to see how well the company is reinvesting back into itself. I like 10% or better for both of these. Return on equity, ROE, sitting at 31.40, beats the 10% I'm looking for there. And return on invested capital at 11.79 beats the 10% I'm looking for there as well. And EPS growth, I like 5% or better projected over the next 5 years. They're projecting 13.79%. So that would get a check from me as well. And nice revenue growth forecasted over the next 5 years at 5.15%. This is not part of the initial criteria, but it is one that I look at whenever I do more of a deep dive into the financials. And just because a company makes it on my watch list does not mean I'm investing. It just means I'm interested in doing just that, looking at more of the financials, their balance sheet, their income statement, their debt to equity ratios. Is their revenue growing over time? Are their margins expanding? Are they buying back shares? Are they paying down debt? A lot of good information in the balance sheet and the balance sheet and income statement. And if you don't want to do that type of deep dive into stocks, you should not be buying individual stocks. You need to understand the fundamentals of a company and be able to value a company before you should be buying into individual stocks. And if you don't want to do that or don't know how to do that, you can still invest into the market. Do what Warren Buffett would recommend. He'd recommend an index fund or ETF that tracks the S&P 500. So something like VOO, VOO, which is the Vanguard S&P 500, or SPY, SPY, which are both in Warren Buffett's Berkshire Hathaway portfolio. So those are two that you could look at. There are other ones out there that track the S&P 500 as well. There's other ones too. VTI is the total stock market. That's what I invest in. SCHD is a dividend growth. VYM, another dividend growth ETF. So there's other ones out there that you can invest in that are baskets of stocks. Some of those we read on when we were looking at their homepage. The Russell 3000, that would be another one if you wanted to go that route. Lots of different ETFs and index funds out there. Let's keep going here. Back to stockanalysis.com. They are quarterly payer, as we mentioned before. Payout ratio, they're saying 17%. Yahoo Finance had them at 16.6%. Either way, under the 75% I'm looking for, and very low payout ratio. Lots of room to continue that growth. And they are growing their dividend double digits at 10.14%. It says 1 year of growth, but they've actually been growing it into their second year now. Well, I guess technically it's just they paid it in 2023. They grew it in 2024. So that's right, 1 year of growth in 2024, but they've been paying for 2 years. Buyback yield is positive at 3.03%. Shareholder yield is positive at 3.85%. We want to see both those numbers positive. They do pay out on the February, May, August, November timeframe, which is off schedule for most companies, so I like that. 2023 here, you can see they started out paying $1.48. They raised that up to $1.63 February 2024, and I would anticipate that since they started in February and they raised in February, the next raise will be in February as well if they're going to continue that trend. All right, let's check out the screeners. So understand the business. They're a rental company for a lot of equipment. I've used them before, so I'm well aware of their business model. You should check their homepage out if you are not. Growing free cash flow. They had the one down year in 2022 or 2021 there. Dividend growth. Yes, we're seeing dividend growth, though it's only 1 year. Keep that in mind. Dividend payout ratio 75% or less. Yes, they're around 17%, under 75% that I look for, so check there. Dividend yield theory we can't use because they don't have the 5 years to look at. It is not within 15% of a 52-week low, so no check there either. Return on invested capital, return on equity, both over 10%, so we've got a check there. And earnings per share growth was double digits, so it's over the 5% of what we're looking for there. So 1, 2, 3, 4, 5. This one is going on my watch list. It is one I am very aware of the company, and I do want to do more of a deep dive into this one. Let me know what you think of United Rentals in the comment section down below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that subscribe button down below and join us along in this journey. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like United Rental you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below. I'll try to work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great day. And drop a comment down below. Let me know what you think of the United Rentals. We will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and there's money. You should never invest any amount you're not comfortable with. Always do your own research. Invest based on your situation, circumstances, and select criteria or seek the advice and counsel to a certified financial advisor.